So Nvidia grew revenue 55%. You've got the hyperscalers spending $350 billion, $400 billion. Who can even keep track after a while? Where are we in terms of this story, in your view? What inning?
Now, I've been doing this job for almost 18 years. I've never seen anything quite like we're seeing right now.
AMD was thought of as the alternative. They said they were going to have a GPU chip. What's happened? What kind of inroads have they made?
And I will say I've made my career being negative on Intel.
What the hell happened to Intel? Can you just explain to me what the hell happened to this company? At this point, I don't see anything out there that's so wonderful coming out of AI that means the returns are going to be so high.
I think the doomsday scenario would be they're spending all this money and there's no return.
Right.
And if that's the case, then I think the whole thing would come crumbling down, frankly, for everything else.
And that's what we're here to talk about. Hi, this is Steve Eisman, and welcome to another episode of the Real Eisman Playbook. And today I'm interviewing Stacy Rasgon, who is the chip analyst and semiconductor equipment analyst at Bernstein. Welcome, Stacy.
Good to be here.
So, Stacy, not much going on in your group.
Never.
Boring. Nobody really cares. But let's see if we can mine a couple of nuggets out of what you do. So I do this with a lot of guests. Let's imagine that we're at a cocktail party. I'm someone who watches CNBC, kind of knows what's going on, but I'm no expert. And we get introduced and I find out what you do. And I think, this is a great opportunity to learn. So, Stacy, give me a 5-minute dissertation summary about the boring aspects of, the stocks that you cover.
You bet. So again, I am Stacy Rasgon. I'm a managing director and senior analyst at Bernstein Research, where I do cover the U.S. semiconductor and semiconductor capital equipment space. Now, I've been doing this job for almost 18 years. I started this in April of 2008, about 3 weeks after Bear Stearns failed.
Good timing for you.
Time that you remember. I've never seen anything quite like we're seeing right now. And it really is a tale of two cities in some sense. We've got the AI trade and the AI stocks, the AI numbers that are just ripping.
Right.
And we've got everything else that, to be honest, is kind of lackluster. And it would be very interesting to see what would be happening to this space, as well as maybe the broader situation, if we were not in the middle of what is a very clear AI boom, because it really is AI that is driving everything right now.
That's the big push.
Yeah, it really is. And just to give you, just to step back a few years, remember, it's only been a couple of years since this really started. Clearly started with Nvidia.
Right.
ChatGPT was sort of the lightning rod for all this. ChatGPT was released in November of 2022. It wasn't that long ago. And Nvidia really started their run in around May of 2023. They had an earnings call.
I remember.
Do you remember that one?
People were absolutely. But this was the reaction of the analyst community.
Yeah, I mean the title of my earnings recap note was the Big Bang,
right?
And it really
that was
really
the
was.
First. They report first quarter 2023.
I can't remember which. Yeah, they have a weird fiscal year.
Late. They always report late.
Yeah, they have a weird fiscal year. But whatever quarter it was, I just remember the consensus for the following quarter was something like $7 billion in revenue, and they guided 11. And today, by the way, 11 would seem quaint.
Right.
but at the time, I had to look at the release like twice to make sure I wasn't looking at the wrong number. Like it was
you thought maybe it was a different company.
It was absolutely insane. And I mean they're doing $50 billion a quarter now, like not 11. So even.
But by the way, before you continue, the one statistic that I always like to say is, if you knew nothing, and you looked at Nvidia's most recent quarter, and you just looked at the numbers, and you said to yourself the following, like 3 sentences: this is the largest market cap company in the United States. It's a market cap of over $4 trillion, and they grew revenue 55%. And then you just stop to think about that just for a second. Like, wait a minute. The largest company in the United States, this is not a $1 billion market cap company. This is a $4 trillion market cap company, and it grew revenue 55%. You have to take a step back and say, and you can't even grasp it, which is what has to happen for that to happen. Yeah. And that's what we're going to talk about.
It's really amazing. Again, I've never seen anything quite like this before. And that's it hasn't slowed, right? It's
right.
these were numbers that when it started seemed unbelievable, right? And it's just been going from there. But it would have been even bigger. You have to remember, like, they got cut off from China.
Right, it would have been more than 55%.
It would have been even more, like, without. So and we're seeing other names catching similar, maybe not to the same magnitude, but similar types. I think Broadcom, for example, we can talk about the whole GPU versus ASIC, but they're starting to see a similar type of acceleration. And there's a lot of other names that are on the periphery, cooling and power and memory, and even in the semi-cap space that are doing well. So that's all doing very, very well. On the other end, you can take the more traditional semiconductors, the analog space, for example. You have your Texas Instruments and your NXPs and your microchips and your ADIs, your analog devices, that actually were super, super strong during COVID. Like, we haven't even talked about that. There was like a massive...
Everybody bought their laptops.
Exactly.
They need all those chips.
So there was a massive overbuild during COVID that some parts of the market are still to this day trying to work off, and we're several years past the peak of COVID. The analog names are sort of in that category. They're well off the peak. There's some hope of sort of a cyclical bottom and recovery. We're still waiting to see that.
But it's not a growth story.
It has not been. And we can talk about it. I've been a little more lukewarm on my analogs. We can talk about that. But like, that part of the semi industry, from at least from a revenue standpoint, has been doing, I'd say, less well, right? And then you've always got your pockets here and there. But I mean, without the AI story, things would be in a very different place right now. But you can look at the overall semi group. I mean, the SOX, which is sort of the broader semiconductor index, at least as of Friday, had been outperforming the S&P year to date by almost 1,400 basis points. The group collectively has been doing very well, but it really is on the back of these AI names that's sort of lifting the. So what that's is the rising tide?
I like to think of it this way. Okay, so Nvidia grew revenue 55%. It would have been more if there was China, but you've got the hyperscalers spending $350 billion, now you've included Oracle, like $400 billion. Who can even keep track after a while? Where are we in terms of the story, in your view? What inning?
Yeah, that is the question.
Because if someone was short, if I believe me, I would never short Nvidia. You have to be out of your mind. But if you had a thesis that you were going to short Nvidia, you would say it's inning 7 or 8, and pretty soon the 55% is going to become 10.
Yeah, there's a couple different flavors of that as well. And that is the bear case, is just these numbers have gotten so big so quickly. How could they possibly be sustainable, right? And you've got Jensen out there, they're talking about, in 2030, we'll be doing $3 to $4 trillion a year of infrastructure spend. These are just like unbelievable
crazy numbers.
Yeah. So I think there's two ways that sustainability question can go wrong. One is the purely cyclical. These guys have spent a lot of money. They're going to keep spending money, but they'll take a pause for a bit. There's a digestion. And even before AI, you could sort of look at the hyperscale CapEx numbers, and they would tend to build and digest and build and digest. It wasn't unusual. And I always say, like, I've covered these stocks a long time. The chances of that at some point happening, it has to be 100%. Only thing I can say is
digestion period.
Digestion. It's not now. And I've been saying this ever since it started. It's not this year. Doesn't look like it's next year. If Jensen and Hock 10 over at Broadcom are correct, like it doesn't look like it's 27, but at some point, I guess so. I don't know when, not now.
Let me ask you a question. What would be the sign that would tell you it's happening?
Yeah, I mean, you're looking, the instant one of the hyperscalers cuts CapEx, like, it's all over. You'd be too late by then. But the point I want to make, if you thought it was purely cyclical, it would be painful. But you could probably feel comfortable buying that dip because you say it's just cyclical and the outlook is still strong. And these things, they go up, but it's never a straight line, right? Fine. I think the doomsday scenario would be they're spending all this money and there's no return.
Right.
And if that's the case, then I think the whole thing would come crumbling down for all of these names and frankly for everything else. I think Nvidia's
by the way, you could make an analogy to the 1999, 2000.
Yeah, sure. People do.
By the way, so I was on the sell side back then, and sitting across the hall from me was a young Henry Blodgett before he went to Merrill Lynch.
Sure.
And Henry was going out and he was making statements like, dynastic levels of wealth are going to be created. The internet's going to conquer the world. And he was 1,000% correct.
Yeah.
But so much money got spent so rapidly that the returns at first were not there.
Yeah.
We had this enormous tech recession, and then eventually we came out of it, and Henry's predictions became true. So at this point, I don't see anything out there that's so wonderful coming out of AI that means the returns are going to be so high. I mean, the search is better. but it ain't crazy better.
And that also is an argument that I actually do think we're still early. If people are worried about bubbles, and I get the fears, right? The numbers are very big. People start to look at like companies like Nvidia that are now starting to invest more aggressively in the broader ecosystem as well.
Yes.
And people start to worry about
pulling a little bit of a GE vendor financing.
Again, we can talk about that, but
right.
people look. I get it. It raises eyebrows. Like I understand. At the same time, though, I mean, it's not like during the tech bubble. Like they were laying fiber, for example. They laid stayed dark for 20 years. It didn't get used. Like
right.
we're not. Nobody's buying GPUs and sticking them in a warehouse and stockpiling. They're all getting used. The demand is off the charts right now. By the way,
just to interrupt for one sec. The one difference, though, important difference between then and now is then you had these rinky-dink companies that had just gone public that had no revenue, had a business plan that were spending money.
These are real companies
and
today.
These are the biggest companies on planet Earth.
My next point I was going to make. Yes.
That's a big difference.
It is. And if people are worried about bubbles, we're not anywhere, in my opinion, we're not anywhere near bubble territory yet. The valuations are actually fairly reasonable. They're elevated, but they're actually fairly reasonable. Nvidia's, I mean, these guys, I mean, if you think the numbers are anywhere close to correct, it's not even expensive. And by the way, Nvidia is way cheaper today than it is before the whole thing started.
Yes.
Like the stock's up a ton. The earnings are on PE.
Right. The earnings have gone faster than the PE.
Yes, they have. So it's not like it's these things are not trading at 100 times earnings like they were during the bubble.
Right.
I always joke, OpenAI hasn't even gone public yet. Like, can we be in a bubble? Like, if that hasn't happened, like, so I don't worry too much. I lean a little more toward the idea that we're likely more on the earlier side than the later side of this.
So maybe
cycle.
inning 3,
maybe 3 or 4, like whatever you want to. I don't think we're in inning 8 yet.
Okay. So let's just talk about the whole, like, I mean, Jensen talks and tells a story that would like insane. So just talk to me about.
He's been pretty good,
and he's been pretty good predictor, and he's been right, but you still sometimes can't even believe it. So just talk about how big the opportunity is, and then let's talk about, from your perspective, what do you think this whole ecosystem will be capable eventually of doing? Because that's the real important question.
Yeah, like what are the use cases?
Right.
Yeah, absolutely. So in terms of the opportunity, so these guys are already spending hundreds of billions. He thinks that number goes to trillions.
A year.
A year. We'll see.
Well, you're seeing countries like Saudi Arabia and UAE getting involved.
Sovereign, and then again, I've got Altman out there, who is very aggressive. And we were talking about this before we started. So you got Oracle with their $450 billion in RPO, of which $300 billion looks like it's OpenAI.
So let me just explain to the viewers what that meant. So Oracle came out and said they use this term. It's basically a fancy term for backlog. Yeah. And they said that the backlog, quote unquote type backlog, had grown to $455 billion.
From like 150 or something.
350% in like 3 months or a year, whatever it was. And then they sort of shut up. And then people started to dig, people like you. And the word was, of a $455 billion, $300 billion was just from OpenAI. And then the skeptics said, well, hold on there for a second, Buddy Brown. Or chat, they don't have, OpenAI doesn't have $300 billion to spend. They've raised $60 billion so far, but they just got another $100 billion infusion from Nvidia.
Sort of.
What do you mean, sort of?
It's not $100 billion right away. They'll do it incrementally as they build it out. So
let's say maybe they got $100 billion in the wallet, but they're losing money, so they're spending that too. So there's no way that OpenAI could spend $300 billion yet. Yet. Okay, go ahead.
They've got other mechanisms. Like I said, they're still private. I think, what's the current valuation? I can't even remember.
I think it's like 300, 500, but who cares?
So, I mean, it's
huge.
The point I was making, though, was that Altman is very aggressive, right? So he's got that with OpenAI. He's got this opportunity now with Nvidia, where they will be helping OpenAI to build out that infrastructure over time. I think Nvidia is going to deploy $10 billion, and they're going to buy $10 billion of equity, basically, in OpenAI next year.
Okay.
Start with that first tranche, and that'll be a gigawatt of power. And to your question on the opportunity, it's funny, the limiting factor, it looks like it actually may be power. So how much?
We'll come to that.
But in terms of sizing the opportunity,
right,
you can sort of think about one gigawatt, the numbers that have been tossed around, one gigawatt of power to power a data center. It's roughly, call it like 50 to 60 billion probably of spend to build out that gigawatt. For Nvidia, that is probably 30 to 40 billion of revenue opportunity for the stuff that they sell into that infrastructure.
Right.
You know, I mean, look, Altman was out the other day saying he wanted to get to the point where they're building a gigawatt a week. By the end of the decade.
Well, you can't build a gigawatt a week.
I don't know what he can do. We'll see. But I mean, you can start to get big numbers, right?
You can't build from nothing to a gigawatt.
Things have to change.
They have to change.
Certainly things have to change.
So the opportunity is still huge.
The opportunity is still big.
Again, let's come back to the question of, clearly these chips are revolutionary. They do things that couldn't be done before. How do you see like use cases? Because like, for example, just from my perspective, when I go on Google and I do a search, I now get two responses. I get the traditional Google search, and then I get the
AI search,
Gemini AI search. And the Gemini AI search is better, and it's more it's kind of like the college student versus the high school student. Yeah. It's certainly better, but does it make my life that much better? Not that much better.
So in terms of the use cases, so you've got those kinds of things. There's, I have my OpenAI subscription for $20 a month or whatever it is, or I'm Googling and I get my search. So those are one set of use cases. I wouldn't call those revolutionary. They're interesting and convenient. I wouldn't call them revolutionary. By the way, I wonder if the real returns on this will not necessarily be, we have the best model and we're renting it out for $20 a month. I wonder if it's really productivity savings. So we're seeing massive improvements, for example, in productivity on coding.
In coding.
Coding.
Right.
We are seeing
how much, let's nail that down a little bit. How much productivity savings are we seeing?
I mean, some
coding?
of the numbers, I can't remember the Google, some of the others are throwing up like half their code now, or half their lines of code are getting written by AI. So I don't know how what percentage that translates to productivity, but we're seeing a lot more of that, right? We're seeing companies that are actually starting to reduce headcount. So a lot of like the big SaaS companies have been reducing headcount.
Software companies.
We saw, I think it was IBM reduce headcount. This was last year at least in their it was thousands of employees in their HR departments. Mm-hmm. You can imagine call centers, like you call up American Airlines or whatever to change your ticket, and you always were able to talk to a recording, which was never that satisfying, but that's actually getting better.
Okay.
You can imagine, you're going to McDonald's or whatever, you're going through the drive-through and there's experimentation going on there. And I don't know what that means in terms of like, employment and everything else at the end of the day, but I really do wonder if it's productivity savings that will help this. And then in terms of other broader use cases, we're moving from these one-shot models to what are called reasoning models, where the model itself uses a lot more compute, but it's a lot more productive. And then even to what are called agents or agentic AI, where you could imagine, I want to book a trip to France and get me plane ticket options that are leaving on these dates, and I want to do X, Y, and Z while I'm there. And, the AI model will just go out and do all of that for you. And you can imagine it uses a tremendous amount of compute. We're not there yet, but that is clearly where things are going. So I don't really sign up for the idea necessarily that that is the bear case. There's no use cases. This whole thing comes crumbling down. I don't think so.
It's not that there are no use cases. It's just that the use cases aren't good enough to justify the enormous amount of money that's being spent.
But again, we've only been doing this for like 2 years.
That's fair.
It's still very early.
Still very early.
In 2 more years, let's say by when we're into this 5 years and we're still having this discussion, I start to worry.
Okay.
I don't think we're there yet.
Too early yet.
Yeah, I still think
worry.
So. Yeah. And I also think that to your earlier point, the companies that are spending this money are not idiots, right? And they can see things that we cannot see. A lot of this used to be, was all very open back in the early days, like when ChatGPT, the model structures and everything were everything's very closed now. Nobody's really, it's a competitive threat to put what you're doing out there. So these guys can actually see things that we can't see. And I don't think they would be spending money willy-nilly just to spend money. They have a purpose behind it. So,
okay. I don't understand. So when Broadcom comes out, Broadcom had an amazing quarter.
They did.
And this is not a company that I'll be the first to admit that I know that well. And they start talking about custom-made chips that they make for Google. Talk to me about the world of GPU versus custom-made chips. Well, what's that all about? Because I really don't understand it.
You bet. So custom-made chip, you may hear the term ASIC. That stands for Application-Specific Integrated Circuit. It basically means custom chip. But I'm going to use that term just so it's not. So there are a couple different mechanisms that you get the compute that is needed to do AI. So one is GPUs, and it's a whole other discussion how that came to pass. But one is GPUs. But the other is custom silicon. You don't have to use a GPU. You can design a custom piece of silicon to do this. And the idea would be, you're not paying the Nvidia tax. The Nvidia's margins are pretty high. And ideally, you can customize that chip to be more efficient for your specific workloads, for the workloads that it is designed for. versus like a GPU, which is general purpose and may do everything well, but may not do individual things perfectly. So this is why we've been seeing this. And all of the hyperscalers are working on their own custom silicon. I will say that the only hyperscaler that has really deployed this in any great volume is Google. And they have a product that they call a TPU. It stands for Tensor Processing Unit. And they've been working on this for 13 years. They're on their 7th generation. Amazon has a version as well. They call it Trainium. And they're on their, I can't remember, 3rd or 4th generation. It's been a few years.
So what do those chips do that the GPU doesn't do or do better?
So they can do anything that the GPU can do. So I would say you tend to design a custom chip for large, stable, internal workloads. Like it costs a lot of money and time to design a chip. So you don't want to do it for a workload volume that's very small. You want a lot of compute. And you want that workload to be stable because the issue with the ASIC is it's not flexible. Like there's no free...
The GPU is flexible.
The GPU is programmable and flexible. So there's no free lunch, right? So I'm willing to stipulate that an ASIC, in theory, should be more efficient for the workloads that you are designing it for. Otherwise, why are you bothering? But again, there's no free lunch. There never is. It's not flexible. If your workload needs change, if your model structures change, you may need to spin a new chip, whereas the GPU can be more flexible to handle that. So my own view is, and if you do the math, by the way, in 2024, just just looking at the value of the silicon itself, the ASICs were probably low double digits, 10, 11, 12% of the total.
Of total of what?
Of total spend on AI silicon, processing silicon. So not the, you have to remember, Nvidia doesn't just sell, they sell racks and all kinds of stuff. If you just looked at the silicon spend in 2024, the ASICs were probably low double digits. I bet this year they're probably mid-teens.
Okay.
If I was to look forward, could they be 20 or 25% of a much bigger pie?
So
I think they could.
What is causing people like Google, some other companies, to buy more of these ASICs as opposed to just calling up Nvidia and say, ship me some chips?
Well, they still buy a lot of chips from Nvidia too.
For sure.
Right? So I would say for internal workloads that are where there still is a lot of dynamic motion and they're not nailed down, they're still buying GPUs. I'd also say for the companies that have large public cloud businesses like Amazon or Google, where they're renting out data center capacity to end users, those customers do not want to use custom silicon. They want to use GPUs. And that's because of NVIDIA's software ecosystem. It's called CUDA that everybody uses. And so, for example, the custom silicon is available. You can go to Google Cloud today and rent a TPU instance. They're available. Nobody bothers. Nobody does it. So they still buy a lot of GPUs for the public cloud as well. I think the whole question, it's funny, around the stocks, the narrative it tends to swing back and forth between GPUs and ASICs. And after Broadcom's report, where they took up their forward outlook for their custom silicon pretty significantly, I'd say the needle swung a little more back toward ASICs. I'd say after NVIDIA's announcement with OpenAI, it swung a little more toward GPU. Broadcom's actually incremental announcement was around OpenAI ASICs. And people were like, oh my God, they're never going to buy GPUs again. With NVIDIA's deal with OpenAI, clearly they're going to be buying a lot of GPUs. I think all of this personally kind of misses the point though. The right question to me is not really which one's winning or losing. Right now, the question is the opportunity in front of us still big or is it not? Because if it's still big, if we're still early, then they both thrive. If it's not still big, they are both screwed.
Okay.
Right?
So your attitude is we're still early.
The pie is still...
So both will do well.
Yeah, and you have to... But if you don't believe that, you shouldn't be invested in the AI space. I think that's...
Listen, if I can believe that, I'm going to leave here. I'm going to go change my portfolio.
So you have to believe it. We're not at the point. Okay. And you can look at some of these. So with Broadcom, Hock Tan's a CEO. He's 72 or 73 years old.
Right.
Everybody always worries he's going to leave. He just signed up to stick around until 2030.
Really?
And he's got some new targets for that retention that are pretty significant. So for their AI revenues, which by the way include both as custom silicon as well as networking.
I'm sorry, say that again?
Sorry, for Broadcom's AI revenues, it includes custom silicon as well as networking. They'll do $20 billion this year. They're implicitly guiding for $40 billion plus next year in 26. And doubling, 100%, over 100%. Wow. And sometime between 2028 and 2030, his baseline target is 90 billion, and his stretch target is 120 billion.
Wow.
He doesn't have to stick around. He's in his 70s. He's already a billionaire. He doesn't have to stick around. He's sticking around. He sees a reason to stick around.
Right.
So
okay, let's move on to some tangents.
Sure.
Let's go to AMD.
Yeah.
So, by the way, for those people who don't know, the CEO of AMD and Jensen of Nvidia, I think they're like second cousins.
They're like distant cousins.
Yeah,
apparently.
Third cousins.
Apparently.
Good gene pool.
Yes.
So I remember like 2 years ago when I was looking at AMD, when this whole story started, the bull case was that at some point, companies are going to say to themselves, I can't be 100% beholden to Nvidia. I want to buy GPUs, but I can't buy all my GPUs from one company because if Jensen sneezes, I got to run over with a tissue.
Yeah.
So AMD was thought of as the alternative. They said they were going to have a GPU chip. What's happened? Yeah. What kind of inroads have they made? What do you think is realistic?
Yeah, you bet. So they've made some. And I will preface this by saying I always tend to be a little lukewarm on AMD, which means I tend to miss the hope phase. We've been in the hope phase like this year, but it's fine.
Right, the stock's up a lot again on hope because they have not really blown numbers away on the GPU side.
This happened last year as well. So last year, they were just getting started, and they'd said, we're going to do $3 billion in AI revenue. And folks in my seat, not me, but folks in my seat said, oh, no, we just did our Taiwan checks. They're going to do 12 billion.
12.
And then they wound up for last year doing 5. And
last year.
This is all last year.
2024.
2020. And 5 is a lot higher than 3, but by the way, the stock ran to 180 on this.
I remember.
And 5 is a lot higher than 3, but it's a lot lower than 12. The stock got cut in half.
But it's a lot higher than 0.
But it is higher than 0. And I don't want to knock AMD too hard. So they did 5 billion last year.
From nothing.
It was 0 the year before. So objectively, that's pretty damn impressive.
Yes.
That being said, NVIDIA did $100 billion, give or take. It's just not that big.
Right.
Now, that is also the bull case on AMD, though. The bull case is pretty simple. It is, hey, Lisa, the CEO, Lisa said the TAM is 500 billion or whatever it is. And if they just get 5%, right, that's $25 billion.
That speech is a speech that every internet company,
sure.
The TAM is $1 trillion. Sure. If we get 2%, we're worth a fortune.
Now, to AMD's credit, they don't have to go out and do $200 billion in revenue. $25 billion would probably be enough, right? That would be okay. And right now, again, people are back in that hope phase a little bit. The stock has actually been decent year to date. It's taken a bit of a breather in recent weeks, but the real...
But so about most of the tech stocks as well.
Yeah, it's fine. But look, the real hope for them, they've got a new... So they've had this product that's been competing with Nvidia. It's called the MI300, which that was at $5 billion last year. It's kind of...
And so how is that chip compared to Nvidia's chip? Just from a pure engineering...
Well, it's well engineered, but it's just behind. And the
how
other
behind?
Years. It's Nvidia.
Years?
Yeah, just in terms of raw performance, sure.
How much? Give me some numbers. How much better?
2 years. 2 years. But they're trying to close the gap. Again, you talk about the bull thesis. So the other issue, though, that Nvidia, that AMD has is software ecosystem. So even if the chip was perfect, in terms of raw performance, it probably still is preferable to use the Nvidia systems.
So let's expand upon that. I'm a CTO of a company, and I need a whole GPU ecosystem. Yeah. So tell me what I get. Obviously, I get chips when I buy from NVIDIA. But what else do I get from NVIDIA as a package?
You get CUDA, which is the name of their... CUDA is a few things. So CUDA is their sort of GPU programming ecosystem.
Okay.
And it is a few things. It is the sort of the programming environment to program the GPUs. That's one thing. Fine. It is also, in some sense, a set of optimizations that happen at a lower level that they've worked out almost by trial and error over many, many years to make these things run very smoothly and efficiently and have the time to market, have the ramp up time be very, very fast. And then thirdly, there's a lot of application specific stuff that they've built on top of this, depending on what you're doing. So for example, if you're doing robotics and you're using AI they have a whole package. It's called Isaacs. It's pre-trained models and libraries and all kinds of things that go about that. If you're doing, medical imaging and diagnostics, they have a whole thing that's called Clara. If you're doing quantum computing,
does that do?
It's AI pre-trained models, libraries, all kinds of things to be deployed specifically against those applications. Clara would be for medical imaging.
So you're writing applications basically on top of their software.
Yes, absolutely. Yeah, and they've got things that can very much help you depending on what you're. And they've got a gazillion of these application specific,
And what does AMD
verticals.
have?
Not much. They're working on it. So their software platform was called Broadcom, and they've been working on it for 6 or 7 years. And again, they're making progress. It's better, but it's also a moving target because NVIDIA's not standing still and
keeps going.
Yeah. In fact, you go to any NVIDIA event, you go to GTC, or you go even when they were talking at CES or whatever, and Jensen will get up for 2 hours and give this big keynote, and it's as much about the software as it is about the hardware. So they've got everything there. So even if AMD's parts were dead-on competitive, which they are not.
They just
even
don't
if
have
were,
anywhere
it's
close
hard.
to the ecosystem that
It's
Nvidia
hard.
does.
And they're trying. Again, I don't want to knock AMD. They're trying, but it's hard, right? And again, it's a moving target. And you just think about it, just to put it very simply, if you're a CTO and you want to set this stuff up, you're buying GPUs, you can buy NVIDIA GPUs and set up. You're probably up and running in days.
So why would you buy anything from AMD?
Well, people have been buying less from AMD, right? I mean, again, there is that aspect of we don't want all our eggs in one basket, although even there I've got other alternatives.
Like what?
Broadcom, and I get the need for a second source, but is it AMD or is it Broadcom, right? I mean, that's a real question, especially for the hyperscalers who are all working on their own silicon. You see some small deployments. So, for example, like Meta deployed the MI300 on their Llama 405.
That's AMD's chip.
That was AMD's chip from last year,
right? On
their Llama 405B model. So that was exclusively MI, but hardly anybody used the Llama 405B model. Hardly anybody used it. OpenAI, Sam Altman supposedly is working with AMD on their MI450, which is the one that comes next year.
Right.
And AMD had Altman up on stage with them. That means it looks like Altman's working with everybody and with Nvidia and Broadcom in a much bigger capacity probably. So AMD's making progress. And that's the dream though. I mean, it's that they don't need to do 100 billion if they did 20 or 25.
It sounds like for them really to go to the next level, they have to really improve their ecosystem.
So I would feel better. Again, I told you I tend to be a little lukewarm. I don't hate it, but I tend to be lukewarm. I would feel better about AMD if I really felt like lots of big customers wanted to use their parts for their own sake because they thought they were better. And I'm not convinced that that's true.
As opposed to just an alternative.
Yes, and I'm not convinced that that's true.
Okay.
But I don't want to knock AMD. Like I said, from what they've done objectively, it's pretty impressive. And you take a look at like an Intel, they were trying to build up an AI product as well. And they had something called Gaudi. And I mean, they were supposed to do $500 million of sales last year, which is tiny. And they couldn't even hit that. They had to walk that target back.
Let's go back to NVIDIA for a second. Yeah. How important is China for NVIDIA?
It is important, but they're not selling anything in China right now.
Well, there are two reasons why they're not selling. The reason why they're not selling now is because the Chinese won't buy.
Right. Well, they're being ordered not to buy.
They're being ordered by the government not to buy.
Yes.
The companies want to buy.
Yes.
Is that, by the way, this is very similar to what happened to Apple around 2012-13, where all of a sudden press came out about Apple, where the press reports were saying Apple is not a good citizen. All of a sudden they had problems.
I mean, look, there were some comments from the administration. How did Lutnick put it? He said, we're selling them like our fourth best GPU. It's not like the laser, but we want them addicted to our technology. And what was that line from that Marvel movie? He's out of line, but he's right.
Right.
But he is out of line. I wouldn't have put it quite that way. And I think there were some stories that the Chinese were irritated by that tone.
I'm sure
it's probably true, right? But it is important. And by the way, Jensen has not hidden from this. And I like the fact that they've addressed this dead on. So there are two reasons that it's important. One is just the purely financial. Sure. China's a big market. Yes, I get all that. That's actually not the most important. The most important reason for them to sell into China is it gets back to that ecosystem question. There are Chinese alternatives today that have better performance than what NVIDIA is allowed to sell on raw performance, because NVIDIA is not allowed to sell the latest and greatest. They have to sell constrained parts. Right. Huawei, for example, has a part called Huawei's a local Chinese, big local player.
And they have a better chip than what NVIDIA is selling.
Better on raw performance. It's certainly not better on power efficiency. But that's the Chinese have unlimited power. They can just build more coal plants. They don't care. Right. And it has better raw performance than what NVIDIA is allowed to sell. But it doesn't have ecosystem. Again, the same thing. They're hard to use. So the Chinese developers would rather use the NVIDIA parts. There's a lot of demand for that. If you do not allow it, if NVIDIA is not allowed to compete in China, what you're effectively doing is, in my opinion, you're encouraging those local developers to coalesce around a local player like a Huawei and make that ecosystem more robust. And eventually it's robust enough where they can use it, because that's how you make these ecosystems robust. You need a developer population that's working with them. And once I've got like a robust competitor in China, assuming they could get capacity, which is a whole other question, but if they could get capacity, why would it stay?
What do you mean capacity?
Could they make enough chips?
Right. That's
a whole other thing that Huawei has an issue with, because we put other constraints on China's ability to manufacture semiconductors.
So what are the constraints on Huawei building enough chips?
The U.S. semiconductor capital equipment players can't sell tools into China to make leading edge.
ASML?
Well, ASML's Dutch, but I mean, so sort of peripherally, but AMAT and Lam and all these guys in the U.S. cannot sell tools to make leading edge chips. So
they could build their own tools, couldn't they?
There are some Chinese guys that do that do tools, but not leading edge, and they're not as good. But they're trying. But these whole issues we're seeing around Chinese competition in AI, we're not just seeing it in AI. We're seeing it in semicap. We're seeing it in analog, because we're forcing. This is a whole other conversation. We're forcing the Chinese to be creative,
right?
And it gets back to my point on AI in China. If we force the Chinese to coalesce around, say, Huawei, and they get, because they're not idiots, right? They're very smart and good engineers, and they build up that ecosystem. Now all of a sudden I've got a robust competitor in China, and then why does it stay in China?
Maybe it gets exported.
Right, and now I've got a robust global competitor. So that's why it's important for Nvidia to be sold. And by the way, I would make the same argument for the semi-caps and for the analogs and everybody else who has constraints selling stuff into China. We are forcing China to be creative in all senses of that word and forcing them down past it. I mean, the way that Huawei's doing their chips, they're making, quote, purportedly leading edge chips at SMIC, which is a Chinese semiconductor manufacturer, contract manufacturer. And the way they're doing it are ways that you would never want to do. They're doing techniques that would not be cost effective if they had to compete with that stuff globally, but they have no choice. So they'll do it.
Right.
And eventually do they get better?
Eventually they'll get better.
Yeah. And so I wonder if like in 10 years, we will collectively discover that we've created a monster.
Right. I understand.
And now it's too late, by the way. Even if we pulled all the export controls away, the Chinese can't stop. Right? They've got to double and triple down on everything that they're doing. So I think it's important for Nvidia to be able to compete in China. We'll see if they're able to.
All right, let's broaden out a little bit to your other stocks.
Yeah.
And we'll talk about Intel last. The good, the bad, and the ugly, as I say. Just talk a little bit about, I mean, obviously there are tentacles to the whole AI story.
I mean, everybody's an AI story now, right? If you talk to any company,
even if you're not an AI story,
you better be an AI story, right? Yeah.
So just for example, you need memory chips if you're gonna build GPU data warehouses. You don't just need GPUs, you need other kinds of chips. So which companies have done well because of this, and which companies have not done well, and why?
Yeah, you bet. So some of the peripheral plays in semis, you have memory. You've got semi-cap.
Right.
You've got some of the guys that do like the power management, like in the servers. If you stretch a little farther out, there's guys that do like the cooling and the cabling and and the optics and that kind of stuff, like the optical connectors. So there's
the old JDS Uniphase, which I don't even know what it's called today.
I don't know.
Something else.
I don't cover the optical space. I got to let somebody else deal with that. But the most direct plays are, I mean, it's probably memory. And I don't cover memory. It's a colleague of mine, but he's been a memory bull, and this is part of the reason.
So that would be like Micron.
Yeah, he likes Micron. There's Micron and Samsung and Hynix. And so in general, he likes the memory stocks. And they've done pretty well. So these AI chips use a special kind of memory. It's called HBM, or high bandwidth memory. It's a type of DRAM. There's two broad types of memory, what's called DRAM and NAND. NAND is like what's in your phone that stores your photos. Mm-hmm. It's non-volatile, so if I turn the power off, it still holds the stuff in memory.
Right.
Actually, remarkable. They've pulled NAND chips out of fires and still been able to read the stuff off. It's pretty amazing. The other is you have what's called DRAM. DRAM is like the system memory that's in your computer. It's much faster than NAND. It uses more power that you have to rewrite to about every 100 milliseconds or so. When I pull the plug on the computer, I lose everything that's in the memory. Okay. It's what's called volatile. So AI chips use a type of DRAM, that volatile memory. It's called HBM, high bandwidth memory. And if you were to look at a GPU, an AI GPU, it's typically got the GPU die in the middle, the logic die, and it's got these little chiplets on the side. Those are the memory. And there's another thing that's benefiting here. It's called packaging. You have to combine all these chips together. It uses a technique. It's called CoWoS. That it stands for chip on wafer on substrate. I'll describe it. Imagine I have my GPU and a bunch of memory dies. All of those chips together are connected together on a piece of silicon called an interposer. Typically it's silicon. They're making it out of other stuff now, but typically a piece of silicon. That interposer has electrical connections that allow all these chips to talk to each other. And then that interposer itself has connections that connect it to a type of what's called a substrate that allow the overall thing to connect to the other parts of the circuit. So chip on silicon on a substrate, chip on wafer on substrate, CoWoS. It's a type of advanced packaging that's done mostly at TSMC, who is what's called a wafer foundry. They are the company that manufactures the vast majority of these chips. They do the packaging as well. So the packaging space, and especially some of the equipment guys that sell them, have also benefited from this. And in fact, when people start go to Taiwan and they do there's channel checks for like how much supplies are, quite often they look at the CoWoS supply, the packaging supply, as a measure for how many of these chips are actually going to get built. But all of these guys have benefited to some degree. I'd say the biggest benefits have accrued to the guys who are doing the compute. It's been primarily Nvidia and more recently Broadcom. You've had some other of the second tier guys that have done okay. You've had like for example AMD and Marvell.
AMD and Marvell.
Yeah, Marvell also does like custom chips and they do optics and things. Mm-hmm. Some of the guys that do power, some of the more analog-y type names, you have Texas Instruments and Monolithic Power and Renaissance and Infineon and all these other guys. As a smaller part of a much larger business, they may do a data center power, and so sometimes there's a narrative there, and maybe they catch a bid. You mentioned Vertiv and some of the other cooling names that they've had cycles, right, depending on where they are. But like a lot of these things are moving from what are air cooled to what's called liquid cooling, and so that's benefiting some of these other names.
What happened to Texas Instruments recently?
Yeah, so TI, the stock got pummeled on their last earnings. It wasn't AI related. What happened was, I should step back. Analog in general, these are guys that primarily do older generation chips, a lot of industrial, a lot of automotive, that kind of thing. These all got really, really inflated during COVID. There were massive semiconductor shortages, and what happens when shortages, people tend to order more. Right. So these guys, they ripped. And in many cases, we are still working it off like years later. That's how inflated it got. This year, people were getting excited in analog that maybe we finally hit bottom and we could start to get recovery. And TI has been calling for recovery, as have others. As we get through the year, though, it's looking increasingly likely, though, that to the extent that we're getting any kind of recovery, it's certainly not V-shaped. It's a lot rounder. Like maybe it's U-shaped.
Right.
And TI, like frankly, during conference season into last earnings, like last May, June, got out and they were very bullish. I mean, we had them at our conference, and I got up, sat next to the CEO, and he said, we're growing 13% in the first half, and we're going to do even better than that in the second half. And like your gross margins next year, they're low. They have other things. We should, when we talk about tariffs and things, TI's investing a lot of money in capacity right now in the U.S., which increases depreciation, is lowering their gross margins. But he basically said your gross margin next year. As it turns out, none of that was true.
So why did he say it?
They don't run a backlog model. They have a lot of inventory.
What do you mean they don't run a backlog model?
Normally in semiconductors, customers will place orders for delivery at a later date, and it gives you some visibility of demand going out. TI effectively has 100% availability of 100% of their products.
All the time.
Well, that's they have like 250 days of inventory. It's purposeful.
Okay.
They don't really run a backlog. What that really means is their visibility is zero.
Okay.
Right. And I'm not saying like it's bad, like it just is. And so I suspect what happened in the beginning of last quarter, I bet orders were really strong in the beginning of the quarter, and
he's feeling good.
He feels good. He went up and he said it, and then he got caught with his pants down. It happens.
Okay.
Right? I think that's what, I don't think it's any more than that. And it's funny too, because their actual earnings when they reported were not awful. It was a modest beat and raise versus sell side expectations, but he had gotten the buy side expectations up. If he hadn't talked like that, I think the numbers would have divided, but the stock would have been 190 going into the print instead of 220.
And where is it now?
It's like 180, right? So I mean, that's what happens. And it was a little bit of a change. The prior CEO, Haviv at TI, who I like, by the way, and I like TI as a company, I really do. But he's a new CEO. He's been in the seat for a year. They had the activists, the Elliott guys were in there for a while. Part of the activist ask was they wanted more communication, so that may be part of it as well. To be honest, I think TI was doing just fine.
Communicated less.
They were doing just fine with less communication. The old TI model was basically not to say anything ever, right? And it was working just fine. That's what happened.
Okay.
So,
all right, let's talk tariffs for a second, and then we'll finish up with Intel. What's going on? Give me the whole tariff situation.
Well, we don't really know yet. We're still waiting.
Yeah.
There's something called the 232 investigation, which is a sectoral tariff investigation for semiconductors, which was opened up on April 1st. And I keep looking every day to see if they filed the damn report, and we haven't seen it yet. So right now we're kind of going off of, Trump's speeches and news leaks. The most recent thing that we heard last week is it looks like the government's talking about they might want customers to have a one-to-one. Basically, for every foreign semiconductor that you purchase, you need to purchase a U.S. manufactured semiconductor. Else, those foreign semiconductors will get tariffed at a higher rate, and we don't know what that is. And there's also been some news that they may be thinking about tariffing not just semiconductors, but semiconductors inside other devices. And I think this is important.
What? I missed that.
Yeah. So, and I'll hold this up. So this is a smartphone.
Right.
This costs like $1,000, say whatever it is. There's probably $500 worth of semiconductors inside this smartphone. Okay. And as it turns out, the U.S.
$500 worth of semiconductors out of a phone that costs $1,000.
Probably. It's probably 50% of the BOM is probably semis.
Okay.
I'm just very rough. But the point I want to make is everybody's worried about, they're going to tariff semiconductors coming into the country. The U.S. does not import that many raw semiconductors. I think in 2024 it was about $42 billion or something like that.
I thought we import stuff from TSMC all the time.
Yeah, but where do those go, right? They don't go to the U.S. They go to China, and the phone gets built in China, and then we import the phone.
Right.
So most semiconductors enter the U.S. inside other things. Inside something else, in a phone, in a PC, in a car. We don't import that many raw semiconductors. And so if the government really wants tariff policy to be effective, they probably need to go down to like we're importing a phone, you're going to tariff potentially the semiconductors inside the phone. And there were some news stories last week that suggested they may be considering this. This has been tossed around once in a while. The problem is the administrative overhead to monitor something like that is an absolute nightmare. I don't know how the industry would deal with it, but it may be happening. So I don't know yet. I think right now most investors just assumed. They're just assuming the Trump taco, basically, that like, if it comes on, he'll give it. And it sounded like he'll give some leeway, maybe.
And he seems to be giving leeway to Apple.
Yeah, and again, you kind of have to, right? I mean, just given, you have to remember, semiconductors are the most global of any supply chain.
Right.
These chips cross, I don't know how many different borders before they finally end up where they are. It's very difficult. So I don't know how they'll deal with it. But something will probably be coming down like in the relatively near future. At the same time, though, we are trying to encourage more local manufacturing of semiconductors. And, the Biden administration was trying to do this with the CHIPS Act. Trump administration, is trying to do this with tariffs. And I mean, maybe it's effective. TSMC is building in Arizona, for example. They were originally going to spend $65 billion there. They're now going to spend supposedly $165 billion there.
Wow. Okay.
So they're building more. And then, I mean, it's a segue into Intel.
Yeah. Let's go to Intel. Back to our cocktail party.
Yeah.
Okay. I say to you, Stacy, do me a favor. What the hell happened to Intel? Can you just explain to me what the hell happened to this company?
That's probably a topic for an entire podcast
it is,
on its
but we're
own.
going to do the short version of it.
And I will say, I've made my career being negative on Intel.
Did you?
It's been the
Really?
keys. Yeah, that was sort of like the big call.
That was your big call. When did you make that call?
2012. October of 2012.
And what did you say in 2012?
I mean, back then it started with pricing. And then it branched out into, they were getting eaten alive by mobile and they missed that transition, and then costs were going up. Pretty much everything that I said was going to happen now is happening. Although I would say the magnitude is much worse than I ever thought it would be. It's really amazing.
What happened?
It's a few things. So it's both everybody focuses on the process technology, but there's stuff on the manufacturing side. There's also a lot of stuff on the product side. So on the manufacturing side, this is what everybody mostly looks at. Intel used to be at the bleeding edge of semiconductor manufacturing. In fact, Moore's Law, which presumably everybody hopefully has heard of, this idea that every 2 years semiconductor transistors on chips were getting smaller and delivering a lot of value. Gordon Moore was one of the founders of Intel and one of its CEOs. And I mean, that's Moore's Law. That's what it's named after. So they were at the lead and they lost that leadership. And it didn't just start. It started 10 years ago. They started to slow down their trajectory of process technology migration to the point where their primary competition, who was TSMC, caught them and surpassed them. So the best transistors in the world today are no longer made by Intel. They're made by TSMC, and TSMC is several years ahead. And so Intel has been scrambling like crazy to try to catch up.
And why can't they catch up?
You
what happened to this company?
This is hard, right? So the idea that with every single process technology generation, we've had players that have fallen off the treadmill. It's not new. I mean, you go back 20 years, there were a dozen different folks that could do leading edge. Now there's three. And in reality, it's really one. It's TSMC, and then you have Samsung and Intel. And I would say Samsung and Intel, maybe they haven't fallen off the treadmill, but they've got one foot like dragging. And we've never had an example of a company falling off the treadmill, getting back on. And it may just be that TSMC is the last man standing. And you have to remember, these are the most complicated things that humanity has ever built. I'm amazed any of this stuff works at all. And I used to do this. Like my PhD is in semiconductor. I used to build semiconductor manufacturing equipment. Right, that was in my prior life 20 years ago. That's what I did. I have a PhD from
in your
MIT.
old Dungeons and Dragon days.
Way back, but I have a PhD from MIT doing that. I worked at IBM TJ Watson Research Center, their advanced lithography and processing. This is what I did. And I'm amazed any of this stuff works at all.
Why are you amazed any of this stuff works at all?
It really shouldn't. When you think about this, I mean, the size of the things that we're making, we're literally reaching atomic dimensions, to the point where you literally can't make the stuff smaller. They're printing features that are orders of magnitude bigger than the wavelength of light that they are using to image them. I mean, it's astonishing to me. I'm sorry, smaller than the wavelength of light that they're using. It shouldn't work.
But
and
it does.
And we make 1 trillion chips a year.
Right.
It's really amazing to me. So the idea that they're having, it's hard to do. And I don't know exactly why. You could argue they made bad decisions in hindsight. There were manufacturing techniques that maybe they could have used that they chose not to because they thought they were too expensive. And the other thing is they've had personnel issues. They had a big layoff in 2016 where they're widely believed to have laid off like some of the best and the brightest, the older folks. And so it's a lot of things, but they've had big issues on process, and it's very difficult to catch up again once they go. Now, that being said, on the product side, they had a bunch of issues too. So they missed many market trends. So they clearly missed mobile, right? And in fact, there's an article in The Atlantic from like, I can't remember, 2012 maybe. I'm quoted in it, but it was an article with Paul Otellini, an interview with him, who was one of Intel's prior CEOs. And he was talking about mobile, and he basically said, we had the opportunity to bid on the chip in the first iPhone. And we turned it down.
Because?
Right? Because we didn't think that we could make it our cost model said we couldn't make it cost effectively. And we didn't think there was any volume. And as it turns out, our cost models were wrong. We could have made it profitably. And the volumes were 100 times like what we thought that they would be. And maybe the world
missed the iPhone.
Maybe the world would be a different place. And to the extent, they actually tried to scramble and get into mobile several years later, to the extent where their parts were so bad, they literally were paying people to take them. It was called contra revenues. And in their worst case, they used to split this out as a segment. In their worst quarter for mobile, they lost $1.1 billion on minus $6 million in revenue in that segment. The quarter after that, they combined it with their PC business, so we couldn't see it anymore. So they missed that. And then more recently, they've clearly missed AI.
Right.
I mean, that goes without saying. Like, they've got no AI story to speak of. But even on their traditional business, I mean, you look at AMD, who's their primary competitor. And we were talking about AMD in the context of AI, but AMD also makes PC chips and they make server chips.
Oh, AMD ate their lunch.
And they've completely eaten their lunch. And here I think it was real arrogance. And I'll give you an anecdote. I was at an Intel event, and I won't identify this person. I was speaking with a very senior Intel executive. And we were talking about, their products, and this is in the hallway, right? And I said, well, aren't you worried about AMD? And this person looked down their nose at me and they said, oh, you mean what? With that chip they're going to launch in a year? And then they spun around on their foot and walked away from me. So they were very, very arrogant. And just to put this in context, you go back to 2014, 2015, the controversy on AMD back then was legitimately, are they going to go bankrupt or not? It was a sub $2 stock, okay? And you know what take servers, because that was their most profitable business. Their server market share was 0.1% on a revenue basis.
Wow.
Do you know what it is today? They just crossed 40% last quarter.
Wow. So they destroyed it.
Destroyed them. Yeah.
Destroyed them.
It's amazing. So
how
do you let that happen? I don't know.
What do you think of their foundry thing that they're trying to do?
The problem is they're having trouble making parts for themselves, let alone anybody else, right? There's no customers. And now they're trying to tell us that they've had this whole, what the prior CEO, by the way, I should even step back. The prior CEO was Pat Gelsinger. Foundry was his thing. He thought that was the salvation of the company. But the problem was his view was if we build it, they will come. And can I curse on this podcast?
Absolutely.
He invested absolute shit tons of money that they didn't have to build out capacity that they had no volume to fill. And frankly, you look at it, I think their manufacturing, their foundry business last year lost $13 billion or something. I mean, they're burning tons of cash. And they have this, what they called 5 nodes in 4 years. They're trying to catch up on the process tech. I wouldn't say that that's gone well. I could go through the whole thing, but I mean, they'll say it's successful.
Why is the stock up lately?
Hang on, I will get there.
Okay.
Let me finish this because it's really amazing.
We're still at the cocktail party.
So you asked, like, why don't they have any foundry business? So they have their current process. It's called 18A. This is the culmination of that 5 nodes in 4 years. It's supposed to have its first internal product for Intel themselves coming out end of this year. It's called Panther Lake. It's a client PC product. More volume next year. No foundry customers on 18A. They're trying to tell us now 18A was never meant to be a foundry node, which in my opinion is bullshit.
That's not
what they were telling us.
I'm not following you.
Sorry.
Say this again.
They're making parts for themselves on this process node. Don't worry about the name of it is 18A. They call the process 18A.
Okay.
Don't worry about what it means. It's the 5th node of their 5 nodes in 4 years.
Okay.
5 process technology transitions for themselves. They were supposed to do other customers on 18A as well as a foundry. Foundry means
they were just making chips for themselves.
Just for themselves. Okay, so they're supposed to they're telling us now that 18A itself was never meant to be a foundry node. We're never meant to make products for other customers. Bullshit. That is not what they were telling us before. I think what it is true is that they did not engage properly with customers on 18A. Now they're saying the real foundry node is going to be 14A,
right?
Which is the next one. And they're trying to engage with customers early. And they'll have an 18A version for Foundry customers at some point, probably the next couple of years. It's called 18AP.
Right.
But there's no volume. There's no customers yet. And look, there's been a lot of speculation. It gets to the point where, like, yes, why is Intel up now? And I wrote it this morning. I think Donald Trump wants the stock to go up. I think it's as simple as that. Like, they're signing deals with other potential customers, like mostly equity deals. So the government took an equity stake. It was $9 billion, which, by the way, this is money that Intel was supposed to get for free anyways. They're supposed to get this under the CHIPS Act.
Right. A lot that came in and said, we want some stock.
Which, fine. I mean, look, better you have to remember, Trump was calling for Intel's CEO's head.
Right.
Not that long ago. So maybe that's worth 10% of the company to not have him doing that and to have him on your side. And then they've since signed equity deals. They gave, SoftBank took a $2 billion stake. Nvidia recently took a $5 billion stake and signed a little product deal with them as well. And maybe we'll see others. But my guess is the equity stakes are probably more at the behest of the government. And frankly, Trump literally tweeted out a picture, an AI-generated picture of himself watching Intel's stock price go up. I thought it was fake when I saw it.
And it was not real.
Fake. It was absolutely real. He tweeted it or truthed it or whatever you want to call it.
Truth socialed it.
So that's a bull case, I guess, of sorts, right?
But as far as you're concerned, nothing's really been fixed.
I think absolutely nothing's been fixed. Been fixed, and you have to remember, all the money is good. Intel doesn't really. I mean, they need money, but I mean, they're not in imminent danger of bankruptcy yet. Like, they've got enough money to operate. What the money would do would be help them build out capacity, but they have no customers,
right?
And you have to remember, like, so there's another bull case, which is the government will force customers to use them. I think that's totally ridiculous, because I looked at this way. If Intel can prove that they can make parts in high volume that meet spec at a good cost that are available,
they'll have customers.
Which is table stakes for Fed. But if they can do that, they'll have customers lined up around the block to use them. People want to use Intel. But if they can't prove that they can do it, what customer in their right mind would ever put any meaningful volume there? Nobody, right? What they need is capability.
Right.
Capability would let them attract customers.
So what do you think of the CEO?
Well, and finally, their lack of capability has nothing to do with money.
Right.
They've had plenty of money.
It's their processes.
It's their, and they've had plenty of, they've just made bad choices.
So what do you think of the CEO?
So I like Lip-Bu. I've known Lip-Bu a long time, and I think if anybody can fix Intel, it's him. Now, that being said, he's not a magician either. He's got to play the hand that he's dealt. It's not a strong hand, but you can see some of the stuff that he is doing, like it works, versus like the prior one, Pat. So when Pat Gelsinger came in, like, people thought he was a white knight in the stock, right? I'll be honest, like, he was, in my opinion, he was delusionally optimistic. You have to remember, he came in, I don't know what kind of a CEO comes into a turnaround and acts like Pollyanna, which he did. He literally said, I've looked at everything. Everything's fixed. AMD's in our rearview mirror. He talked about the stock being a double-double. We're going to double the earnings and double the multiple. He definitely doubled the multiple because the earnings, like, went to zero, right? I mean, and he put out these, I mean, they had an analyst day in February of 22 where they put out these ridiculous, I use the word, I think, outlandish, and right, they were ridiculous targets. We're going to do $120 billion in revenue by 26 with no foundry. And I mean, they're doing less than half of that. It was crazy.
Right.
I originally thought he was just pandering to Congress to get the CHIPS Act passed, because that's a lot of the CHIPS Act came from him. I've since come to the view that he believed those targets.
Wow.
And he finally, like, they finally booted him. Yeah.
So this guy's good.
Lip was good, and he hasn't come in to be. He's literally tried to. He said we're going to underpromise and overdeliver, and it's all about the customer. He's trying to get new engineering leadership in there. He's trying to remove, like, layers and get much farther down into the organization so he can know what's going on. He's doing absolutely the right thing. I like Lip a lot. Can he turn it around? Call me in 3 or 4 years. I don't know.
Okay. This has been great. Stacey, thank you very much.
Oh, no, you bet. My pleasure.
It was really
anytime.
A wonderful interview. I learned a lot.
Yeah.
Thank you.
You bet.
This podcast is for informational purposes only and does not constitute investment advice. The host and guests may hold positions in stocks discussed. Opinions expressed are their own and not recommendations. Please do your own due diligence and consult a licensed financial advisor before making any investment decisions.